So last night, spent some time on portfolio construction or portfolio set construction. And we spent a lot of time talking about disruptors as a vision for like a 10 to 20 year time horizon of sectors and then targets that matter. And the way we get there is sort of like this. I have been concentrating on the Dow 30 and the ETF 30, for 25 years because they had all the things that I needed for the style of trading I want to do, which is very liquid, underlying value, a lot of interest in them, must own by institutions. They are cyclic, seasonal, disciplined. They get moved by a lot of different reasons, technical and fundamental. They correlate to business cycles. They're affected by policy and legislation and international events. They also are diverse enough that you can see a real differentiation between sectors and between targets and their sectors when you look at that combined set of 60. So out of that set of 60, I have plenty of things to choose from. But over time, I have developed some additional things that I look at. I think of them as specials. And these might be symbols from the S&P 100 or 500 or the mid-cap 400, or even small caps or special cases that cross over the line to be of interest for different kinds of reasons. Like they may be components of an ETF or sector. They may have been in the news. I may know something about the company. Maybe I did a case study on them in my my strategy class for my doctoral students. Or they may have come up on a swing trade pattern or a day trade pattern back in the day, and it traded really well, and so I developed a relationship with them and have just kept them on my radar even after I started to focus more closely just on the Dow and ETF 30. So they just remained on the stack. Well, Alcoa is one of those kinds of things because it was originally a member of the Dow, but my sister-in-law worked there when it got bumped out of the Dow. I had invested so much time and emotion in studying it, and I felt very comfortable trading it, and I liked all the characteristics of it. So I just kept it on my stack of specials, and it became one of those things that I always look at. Cliff Natural Resources is like that because I had some beliefs about the importance of steel to a nation, and that no nation can be a nation if they can't make their own steel. And so I was studying steel as a sector, so you can get SLX and U.S. Steel, Nucor Steel, Cliff Natural Resources, XME Metals and Mining, XLB Basic Materials. So there were a bunch of ETFs, and then and Alcoa was kind of just in that whole group of metals and metal workers. Well, Cliff turns out to be one of my real favorites in there for the reasons I talked about yesterday, and so is U.S. Steel. Nucor for a while, and then also SLX, XME, and XLB for the same reason I just described, that they are very liquid. And so that whole segment is kind of a relationship between, companies and sectors, and where those sectors fit in the broader market. XLB is very broad, XME is narrower, and steel is the narrowest of all. So you get this combination of core and turbo in targeting, as we described yesterday. And then U.S. Steel is large, Cliff is mid-cap, and Alcoa is pretty large, but it's aluminum. So you get a really nice differentiation as well as a synergy out of that whole segment. Well, by the same token, XBI and ARCG, ARCGenomics, are two ETFs. One is a broad S&P sector. ARCGenomics is a subset of XBI. And in my view, biotech is one of the 5 or 6 disruptor technologies that are going to have this 10 to 20 year horizon. I would put space in here too. So I think of marijuana and CBD as a disruptor of the pharmaceuticals, and biotech as the next big human engineering project. Green power, obviously, because of reasons we know the story of PBW already. Batteries that fuel and store energy, not just for electric vehicles, but for homes, is kind of foundational, the same way you want good shovels, no matter what you're mining. And so lit is a good one for that. Crypto, obviously, and so blockchain, BLOK, is a good one. So in biotech, there's already kind of a pair trade going on. In marijuana, it's MSOS versus MJ. I don't really have one for finance yet other than crypto, but I am checking out over here on the companies, PayPal and Squarespace, both web-based financial services that are really revolutionizing modern personal finance, and they're both accepting crypto. So they get a combination of both crypto and financial services. Space, that's going to be basically SpaceX when it comes public, Virgin Galactic, and then whatever that blue thing that Bezos, who is now going to focus on space now that he's stepped down from the CEO or chairmanship of Amazon. So as soon as there is an equivalent ETF for all that, then that'll certainly be one of the disruptors, because that's the economic exploitation of the asteroid belt. It's not settling on Mars, it's the asteroid belt. That's where the money is. Because the asteroids have already kind of pulverized a planet, and all of the heavy metals are clustered together in certain asteroids that we know of. And there's a lot of money just floating around waiting to be sucked up. So I think these are things that are likely to be disruptors for the next 10 to 20 years. And they have the current feature of being very volatile and lots of interest. It has both volume and volatility, and very cyclic, and real competition for winners and losers inside of those spaces. So while I have this kind of conservative portfolio where all our patterns work just fine, and I've developed specials over time, this is kind of now like a third generation idea of disruptors that I've really been concentrating on that a lot in the last 6 to 9 months. And I'm really satisfied that all our patterns are working really well. Well, Ken Hum has shown us the value add of, when you take PBW and you break it down into its top 10 component lists of the holdings, you can now have those. You might want to concentrate on one or more of those. You might say, hey, well, these two are really providing most of the horsepower, like symbol SOL is up about 1,500% in the year that PBW is up 180%. So a lot of that outperformance came from these a couple of symbols inside PBW. Well, if you know that, you could maybe set that up as a pair trade or a market sector company core and turbo, and really get some concentration on the companies when they are in the right pattern, or you might just default to the sector. If the companies weren't setting up well, you could focus on the sector, but if you want to go even further turbo on it, you might go to the company. So on that basis, Bill Scheidt did us a solid last night, and so he went through the things we talked about last night as disruptor segments, and I'll post this in the on Patreon and in the chat room. So he went through and took a look at the top 10 holdings from ARC-G and blockchain and the lithium battery. Now, the lithium battery is interesting because you have Tesla in there already, and that's pretty cool. So you have some exposure to Tesla already. Blockchain was interesting because you also have Squarespace and PayPal both reflected in there. So even though they're not just blockchain, they actually have such a large exposure to blockchain that they're doing very well. And then you have Riot and MicroStrategy Incorporated. So there's this makes a nice comparison trade or pair trade between blockchain, the ETF, and like the Bitcoin trust from Grayscale and the Ethereum trust from Grayscale. So you can see the size of the holdings. For lithium batteries, the marijuana holdings out of MJ. So like I'm going to do a comparison between that and MSauce. In fact, why don't I just, here's another one. So POTX is another one. So those three in a row, what I'm going to do is put those all kind of together. So Tilray, you can see, is an important element because it's such a huge part of POTX as well as MJ. And Afria is in 2 out of the 3, and so on. So we're going to do some cross-component analysis. And then here's the PBW. So SOL is the one that was up like 1,600%. And FCell is an important one. So we'll be, in order to develop this idea further, we'll also build out the, the components of the ARC. So like ARC, as a family, ARC is just amazing, and they're all about trying to find disruptors in all of their funds. And so we are already following ARC-G for genomics and biotech, and ARC-K for innovators. And so we'll just keep looking at all of their stuff. And by looking at their components, we will be getting some efficiency in the use of time and analysis. So when you come up and look at XBI and you say that's a great big S&P 500, every S&P 500 company, so you got SPY here, and then every S&P 500 company that's involved in biotech is here, and then some subset of that, ARC-G, but ARC-G also has some things that are outside the S&P 500, so there's the possibility of getting a small cap. So if you look at XBI and then you look at ARC-G, you'll see that there is some overlap on the large caps they really like, but then also some small and mids that are not in the S&P 500, which may give the possibility of the more explosive growth. So that's why you see me on each of the dailies when I'm going through the sectors, looking at the relative strength of XBI versus ARC-G to see who's winning. And right now it's still ARC-G is in the preferred position. So I want to just share that idea with you. Yeah, and Lisa points out that Afria is going to merge with Tilray. That's going to make them combine the largest California cannabis company. So my brother, who is a hospice nurse and an ER nurse, has been following that whole sector, and he's been thriving on Tilray and MSauce as well. So that's what I want to say about that. All right. So that's good. So this is for the analytical folks out there. So here's a thought experiment for Ken and Lisa And I'll shoot this over to Bill Scheidt and Jeff Boccaccio, our little wireheads. Chi Wang, you may also be interested in this one. So here's the thought experiment of if you wanted to test the efficacy of the, let's call it the Z3p pattern. You'll recall that in the Z3p pattern, what we had was we had an SQC developing to the point where maybe the Bollinger Band mean looks like this. And you may have had some RL10 price action that looks like this, and then it kind of locks into a real tight range compression. Maybe this RL30 looks like that. Further on downstream, the RL270 may join RL270. That may join the party. And of course, the RL90 may end up joining the party at some point too. And so we might say in this area, there's probably enough reason to call it an SQC because we had 10 bars of sideways and the slope of the RL, or the slope of the Bollinger Band mean, I should say, is flat. And you can see you're getting a compression. But what we know is that it's better to wait until you see something like the Z3p happen, where if you were to take, a frog box and say, when the frog box, imagine these were the same size. I think I could draw to scale. So imagine those were at scale. So now when I have the Z3 lines inside a single frog box, now I have officially a Z3 pinch. I have an SQC plus I have the Z3 lines are inside. Now, if this were to get even further narrow, and stay like that, and then, of course, you'd see if it narrowed that much, the RL30 would be stuck inside there. I'm exaggerating the scale a little bit, but now everything is wired real tight inside of that, inside the Z3 lines. And now the RL270 and the RL90, this is when you get the RLFF. It is almost, the super pinch, I meant to say. Getting ahead of myself. Because you have the SQC had become a Z3p, and then the Z3p plus the 4 regression lines are all inside that frog box. What you have is a super pinch, and now the breakouts from that can really be amazing. It almost acts like an acorn that can grow into the oak tree. It has that much capability. And it's not unusual to see that, unfold in multiple moves, right? So the potential is great. The real question to ask is, should we hold out for the super pinch or should we just take Z3p? Well, we should always take Z3ps because in practice, they're really good. So now there's a research project of interest that I want to try to entice some of our quant guys to take a look at. And that is the idea that, so there is a relationship between the average true range or the true range, pick whichever one you want, and the frog box. It's not unusual for if you had the low of the day down here, the maximum reasonable move intraday is the range stat, right? So that's the average range. In this case, that would be from the low of the day to the high of the day. And so you have an average, and then the range stat adds one more standard deviation. So that gives you the maximum reasonable intraday move. So when we see a price sells off and makes an early morning hook, and we can put some kind of fractional frog box on here, like a quarter or a half or something, the minimum manageable risk box, and it starts moving out, we're entitled to say, well, how high can that go? Well, it can go as high as a range stat. And it may be that the MMRB is 1/4 of a frog box. So you could get 1, 2, 3, 4 MMRBs inside one frog box. And the one frog box is the difference between signal and noise. So until it moves a frog box in one direction, you're entitled to say that, hey, we're still in the noise zone in here until it breaks out above that frog box. So if we can get an MMRB exit, what that really means is that we have seen a manageable risk box, and it's moving directionally, and we're going to front run this move to a frog box. And we know that it's a good idea that after it's moved from the low, moved one frog box, that this is a positive expectancy system. So if you can get that extra gain of 1, 2, and 3 MMRBs, and now when you would normally just be entering the frog, you could be getting, at a minimum, your risk to no lose plus dinner for 2, and now you can let that see how many frog boxes up that you're going to get, knowing that you've already taken your risk out by being able to enter down here at the MMRB instead of waiting for the frog. Well, when you look at this enough, what you realize is that for the average symbol in our interest list, that an average range is usually about 3 frog boxes. That's kind of normal. And that a range stat would therefore be 4 frog boxes. And when you see in our chart the frog quality number of 3, what that means is that there is n plus 1 frog boxes in the range stat. That means when it has a frog box of 3 and you let it come off the ground 1, there's still 3 to a range stat. So if you do some quick math, if you're still with me on this, if you can get an MMRB, that's like 1/4 of a frog box. 1, 2, 3, 4. You could get 16 MMRBs on something that has a frog quality number of 3 because of math, because each one of these little frog boxes has 4 little increments of MMRB. So when you see us on the bar by bar trading during the week, and we frame some kind of little critical state, and we get maybe it was a move down and then it moved out, and we get 1, 2 real quick, and then a third one and a fourth one real quick. When those pay off, you're seeing us get these kinds of moves, and they just go. And I think it was Thursday or maybe Friday, maybe it's Thursday. There was a 40R execution R in PBAR, or in blockchain. And there was a 20 in Devon. And earlier in the week, there was 25 in Cliff. So we're getting those kinds of moves quite a bit by emphasizing the idea of a critical state that has been compressed into a really tight yet manageable box after some magnitude of a move has occurred, and then it doesn't fail any further, and it starts making that hook. And then we can define that as a critical state, and then get our risk out fast, and then just enjoy the move. So I say all that in order to set up the idea of this next research project for the team. So I just want you to imagine if, we have this progression of an SQC to a Z3p to the super pinch, like I just said. And I said, this is great. This is really good. And you can probably be patient on that one, right? So I've been advising, hey, trade this one a lot. So I want to know just how good that one is. So let's imagine that you could run a bunch of scans. And so you had a bunch of symbols intraday. You had a bunch of case studies where you waited and say, hey, let me list all the Z3Ps that occurred. And we know what those criteria are, so we can find those criteria pretty nicely. And sort of by definition, a Z3P is going to be a critical state because it's sideways on the clustered around the Bollinger Band main, and the Z3 lines are well within a frog box, right? So we have been saying if it breaks out of that Z3, you just follow it, and then as soon as you can, you just get your stop to no lose plus dinner for two. But what if instead of worrying about the techniques of the exit, should we do that one, or should we just follow a PSAR, or should we trail it with the Z3 to Z3 box or half the box or whatever? We'll just set up something like this and say, let's suppose that that if it goes in that direction, that we're going to see at least one frog box on really good moves. And we know that if it moved a full frog box, we're not going to lose money on that trade. So really the first question we want to ask is, if we kept this Z3, the far side Z3 as the risk, what we really want to know is, once this thing breaks out, what was the maximum favorable excursion before it retraces and hits the risk? Or you might say, for every time that it leaves the station, how many times did it come and violate the far side Z3? In other words, it broke out and then reversed and came this way. So that would be a failure. If you set that equal to 1R, what if I just bought or sold the breakout or the breakdown and then just let it go? So you would get at least two data sets on that. You would say there's a number where, yes, it came back and took a 1R loss. And then you want to know, what is the histogram of the maximum favorable excursion? And you would calibrate that in increments of 0.1 of a frog box, or I would also accept 0.1 of an ATR or a true range, because that's going to be pretty stable. The ATR is pretty stable, but I really think the frog box is the right way to do that. And so you would see some things that went really well, and some that didn't do well at all. And then you'd have some that after the entry to the downside, no matter how far it went, later in that day, it came back and violated your initial risk. Okay? So for all of those, you want to know how many came back and violated the risk and how many did not. And that would give you something like a win rate on the most naive or the most passive risk at all, which is just buy it in the direction it's going, or sell it in this case, get it short, and then just leave it alone and just accept whatever the trade will get you. So we kind of want to know what's the win rate. What is the win rate between X and Y? And then we would want to know on this side, we have to say how many went this far, or no, I'm sorry. How far did they go into the positive before they came back and hit the -1? And that would give you some idea about how soon should you start protecting that 1R risk. Because it may be that all you have to do is let this thing get a half a frog box and then just move it to no lose plus dinner for 2, and then just leave that one alone forever and accept that as a trade. I think in my heart of hearts, that's probably a really good idea. If you wanted to trade absolutely without management, you'd have one management box. And then a variation of that would be, as soon as you buy the breakout, just start trailing it with your MMRB, and when it gets to no lose plus dinner for 2, just stop. And that way you never prematurely get out. Now, you don't do a very good job of protecting profits on the other end, but we want to know what this thing does with a minimum of management, or a naive hands-off management. So you want to know how many come back and hit the 1R, and then how many don't. And then on the ones that hit the 1R, you want to know what's the maximum favorable excursion, so that you can determine if there is an obviously better opportunity to preserve. Like if this thing was always getting to one frog box, like if 80% of them got to one frog box and also came back, you would say, well, that's stupid. All I got to do is when it gets to half a frog box, move my stop to half a frog box. So that's why you kind of want to know what the distribution of, how many hit at this level and this level and this level. And so if you make it in increments of 10, then you get some fidelity. You start filling up those buckets with how many actually filled in, and then you'd get a distribution, and then you could answer this part of the equation. And then for all of the ones that didn't come back, you might want to say which ones came back to your entry but didn't hit the -1R. So this would be, what's the number that lost, that came in and lost money but didn't lose a full 1R by the end of the day. And then what's left is the number that made money. And so you want to know what that X, Y, and Z, you want to know what those percentages are, so you get some kind of sense about how good is that in terms of winning performances. And then for each one of those, using the simplest metrics of all, you want to find that maximum favorable excursion. And then once you do that and you see the pattern of the histogram, you can do a second round of testing to start seeing what the effect of exit strategies might be on each of these 3 buckets. And this insight into maximum favorable excursion, once you integrate all that stuff, you'll have some notion about how good the Z3p as an entry really is. And my spider senses it's really good. And even what we do with the no lose plus dinner for 2 does such a good job of preserving exits, because you can go back and look from the start of the year. And I think we started doing bar by bars extensively in about the middle of December. So we've got about 50 days of data. And the folks that have been here every night, think about what the maximum adverse R position was from anybody that you've seen. The worst is -2. That's the worst we've seen. And it felt kind of awkward or uncomfortable when they even lost 2R. And the most anybody's ever lost on any trade is 1R. And yet the numbers of double-digit wins that we've had have been pretty remarkable. So what this tells you is that just from practice, we can tell you that finding Z3Ps or critical states, and I would put into that category an SSC when this thing has had a big sell-off and now comes up and has just crossed the dragon, and that little box that we put in, that MMRB, that's a critical state. And we've shown that we can be pretty good at protecting the risk on that one, and then being exposed to large wins regularly. So this is the idea for a research project that will allow us to put the law of large numbers on here and get some better robust definitions of just how good that is. I mean, I'm really satisfied that it's robust, but this will be a chance to satisfy some of the quant people. And then, again, once you get that initial setup and you get those 3 buckets, you can then start experimenting with the different exit strategies. Like the guys doing the SSC, you could actually also do this with not just the Z3p, but the SSC. It's just that the Z3p is probably easier to check. You could also check this right from the open. The same methodology would let you pick, say, right from the open, and you set up a hybrid frog, and it either breaks down or breaks out, and you can see how soon. If I just put the PSAR trail, or I just trail it with a half a frog box or a third of a frog box, what does that auto rule generate? So what you would do on that one is you would find all swing patterns, because our logic is that anything that fired on a swing pattern the day before, the next day is in a critical state ready to pop. And so you could really see a large move right from the open. Or you might say, give me the top 10 gaps. So this thing closed here and then opened here, and that qualifies as a top 10 gap in the Dow 30. And you say, my argument would be, the top 10 gappers in the Dow are the ones that are most likely to have larger than normal moves, and therefore I already know right from the open what the biggest gaps are. So even if I just took the top 5 and put MMRBs on the open and just let it go and trailed it with an MMRB with no re-entry or anything, just what does that do? And I'll bet you that it does some pretty interesting results. I already know that that's true, by the way, but I'm going to let you discover that that's a really good idea. So there's about 4 or 5 different research ideas that are in there for you to consider. Looking at you, super traders. All right, enough on that. Okay, we got a handful of frames to look at, courtesy Chi-Weng Chong and Ken Hum. These are all they're all good ones, so we're going to take just a quick look. Okay, so this is Cliff. The weekly has come into the station and given us a rising set of lows and stable highs, so it's kind of like an upward. And so now this is like reverse ice breaking. Like it keeps pushing this thing higher and higher, and at some point this is going to break. And when it does, we want to see it get above here and above here. And if it gets above here, it's free running. And this was the first hint, and then it pulled back, but now it's held this pretty tight. So that's an automatic entry in the second and the third. And I think that's a good venture, because then if this breaks, then it's below. You've got two positions on as it's testing, and then if that does break, there's that's not much support, and then it'll get back into this cluster pretty nicely. So you'll have a nice position in either direction, and this stabilized all nicely on Friday. It's well poised, but again, when it cracks that much. So as soon as it breaks down, you can get that. That's why Cliff is an amazing trader intraday. Oops. There's Cliff. This one is Amgen is still breaking my heart. It hasn't failed further, and it's still well postured for some gains. I keep holding out for the possibility of this amazing move to the upside here to 275. It sold off harshly, but now this feels like a stable price level well above this price level. So it's maintained that next step up in the same way that this was a step, and this was a step, and this was a step. So it was up 2 steps, back 1 step, and then up. It skipped all over this one altogether and went all the way up into here. Now, when it recovered, it held 1 step higher than here. This is X plus 1. So I'm still hopeful for that possibility. Here was that amazing run-up. Here was the symmetrical sell-off. It's held right in here. Hasn't broken down further, but if it does, it'll come down into here. And it's held that level twice. Each time it's given you this. This one only got halfway up the stack. So a move at least, let's call it 240 is there. So you got like plus $3. I think if you can buy it here with a dollar stop, there's your 2R just to 239. And then if it breaks above here, then it'll get to here to 242, and that would give you 4, 3, 4, and 5. If it breaks above there, above 242, that would be this. Now it's free and clear and going, and then it could get to 250. The breakdown is easy to see, so I'm actually a little more aggressive on wanting to get in here. But even if you waited to here, that's okay. But I wouldn't be averse to trying for that. And then the short side breakdown is quite obvious. It gets to 225, 215, and then 205. And quick, fast, and hurry. Blockchain is the amazing, of course, everybody wants this one. So the weekly, it's just wild and crazy, and off we go. Squarespace and PayPal were all very strong. Bitcoin and Ethereum were up over the weekend. Goldman Sachs announced that their $150 billion trading department is looking to start getting heavily into Bitcoins, which means they're already there. If they told you they're going to start, that means they already are. And it's pushing 50K in Bitcoin. So blockchain by derivative is going to do well. And the daily had a really nice close. And so this is just all systems go. And I think as soon as you can get your risk out of there, off you go. And this is that disruptor that's just going to work. And then on the hour, you see, there was no willingness to sell that in the last 4 hours. They were willing to hold that exceptional move over a 3-day weekend. So this thing's going to go. And even though the U.S. market is closed, you can see how that's going to trade in the globals, and they're going to do very well, because I think all the globals are going to want to buy it on their exchanges while the U.S. markets are closed. So I actually expect a big day tomorrow in blockchain. That's called stealing a march. All right, here's Intel. They still just can't get out of their own way, but they are making a little bit of progress here. I will say that. Yeah, so it looks like they've been able to overcome these two sell-offs. They locked in these gains, this move, support and move, and now it's pushing at the top, pushing the Z3. It's already above the hump of the dragon and testing the hump of the RL10. So if it's been undervalued for so long, it could really go. Closed very well. Yeah, just get it and go. And see a great American company get back in the fight. So on the downside, I like all of these. I like all those prices to get it back to here. And then if that fails at 58.63, you can see it's going to come back and test the PSAR or halfway, and that would give you 3 or 4 positions short just on the normal recovery and retracement, and you'll make a lot of bank inside there. So good frame. Alcoa, very stable. So this one is perfectly poised in every time dimension for a sideways quiet channel Z3p breakout. And that's why this one is, you really should be market neutral, because look, you got the weekly is stuck right in the middle of a big move up and a big move down, and perfectly placed and symmetrical with small risk and large moves. And you can see exactly the same thing here with just $1. It is a $4 move to here and a $3.50 move down into here. Perfectly poised for the big break. And you can see that it makes that kind of move routinely. I really think this is going to hold. And so my spider sense is that the upside is there. And then on the hourly, it held pretty tight here. I might get short like right here. Instead of waiting for this one, I think I'd get short if it cracks right there and then add a second one here. Because I want to, when this thing fails, it fails big. You can see how those, once it gets failing, those moves happen fast. So if this were to crack, I want to be short like right there and capture that move. XRT is exactly the same. This is S&P retail, not as volatile, except for that move 10 days ago, which was, who knew, don't even know why that happened. So, this is such a sideways quiet channel. This is the same thing as Alcoa, but in retail, so you don't even need to mark it up. Same. MSauce. This one's excellent. This is showing a strong, almost like a triple screen kind of a move here. You can see on the dailies, stability levels. This one was a little bit higher than that one, so you had up 2, back 1, and then when it broke out of here, all that, once it clears that resistance, off it goes. So now you can see really strong move, twice the size of that move, and stabilized here. And the pullback just got it to the edge of the dragon, and then it's right in the middle. So now if this breaks out, here's leg 1, and then if it breaks above 50, call it 55. This thing will get you another big move to 60 pretty fast. On the other hand, if this is going to retrace and come back into this cluster of price, then this price ladder will give you the ability to build a position on the way down, and then I think your target would be the PSAR. But everything about this is to love. That's why this is a disruptor. Yeah, and the hourlies, they tried to push it on Friday, but then they were probably leveraged, so they pulled it back in the last hour. So this is really poised to go in either direction, and I like those as the initial entry points with about $1.50 of risk. Albemarle, this is one of those disruptor companies. So there is a phenomenon in business strategies called the diffusion of innovation curve, and it usually goes something like this. You got some true believers, and then there's an initial run up and surge of enthusiasm. It gets a lot of people's attention, and then when all the enthusiastic young people buy it, and then there's nobody left, it starts to get tested, and the short sellers come in, and then the wave crests, and then it's always interesting to see how far down the stack it goes. And a lot of times it'll come back into here and then stabilize right at this little moment. And this is the test case. Because now, the reason it stopped failing is because new money came in and said, oh, we think it's now closer to real value, and we can buy this with a tight stop. And even if it just goes up to test the previous high, I can get my little 3-to-1. And so institutional money starts coming in to push that up. And so then you get that move to here, and then this is the second test. Can it get through that previous high? So if you take a look at this in Albemarle, you say 190 was that upper level. In this case, well, I almost drew it to scale, didn't mean to, but this move here to 164 is that pullback, or 155 is the pullback, and it's stabilized over the long weekend. So now we can say, can it get to the 180 level of the RL10? Can it get to the all-time high? If it can break above that, then off it goes. Easier to see that enthusiastic buying level, which happened at this price level, which is this price level, and it voted higher on Friday. So instantly, it's going up, and we buy it, and it breaks the PSAR. So we get a PSAR flip, and you have about a $4 stop, which is about 3%. And you're playing to the top of the dragon, and then the top of the RL10, and this should go. But if this fails, then it's going to at least come to here, and if that cracks, it's down to here and down to here. So nice pattern. But this was pretty favorable price action on Friday. And I think you can see that that's going to be in play. 170's in play. And then, I would say, 178. Then this is the last place it collapsed, so that's in play. This is in play, and then that's in play. But that first move is good, and then you have 1-2 scoops to here. Good. Albemarle, the diffusion of innovation curve. It's like a law of physics. PBW, just as good as it can be. It has started to stabilize, but now I think that we're going to be shifting to the recovery and relief package now that the impeachment farce is over. I think impeachment has gotten everybody's attention, but that now there's $2 trillion getting pumped in, and to every Republican claim about why Biden is horrible and causing jobs to be lost, the only answer they have is, well, green energy jobs are going to be building us back better, and it's high-tech jobs that are union that we can love, and blah, 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 all that crap. Well, anyway, they're sort of all in. They have to be all in on PBW and clean energy because they got nothing else. Because all the jobs that they've been torturing is losses to the other traditional sectors. And so clean energy is everything that they're hanging their hat on in terms of being able to hire a lot of people. So I just think this is the pause that refreshes. This was a nice, stable break, and I think it's still good for the long term. It has to be. I don't want to be short that one, although I can see if I would wait, I think, until the PSAR, the Bollinger Band mean broke, because that has been, strong support the whole way. And the last time we saw that it got close, the PSAR and the Bollinger Band mean was here, and it voted up. Well, here it is, close again. What's it going to do? Vote up or break down? If it breaks down, it comes to here. The least likely case. Because as far as this, every dollar it comes down, you get more and more people that are wanting to buy it on sale. Novartis is kind of the same thing. You've got that long, strong move on the weekly. On the daily, the hook is in. It's a SSC already, and it closed very well on Friday, so this is a breakout, and the box is perfect. Second position of the Bollinger Band mean, just right by the numbers. You don't even have to mark it up. Quantum space is a tricky one. It is so volatile, but what we talked about this one this weekend and in the Swing Mastermind, and I just think that this is the moment right here to buy. It was Friday or Tuesday on a continuation second day entry. Still plenty of time. This is that diffusion of innovation curve fully realized, right? You have the great big move up, the pullback and stable, and just the beginning of the hook. And this is the tactical money all the way to 75 through the dragon. And if it breaks above here, that's where it really takes off. It has to get above the dragon and this price level here at 75. But there's plenty of room just in the tactical gray area. And it's only had 1 day of gains. This was one burst, and they were willing to hold it. That thing is ready to go. That's one of the the ARC-K components in the Innovators ETF. I guess this is Peloton. I'm not really sold on these guys. They are kind of a marketing campaign. Way pricey. There's a lot of competitors that are getting in on the branding for people with a lot less money. I just, you could trade it if you wanted to, but I think they've already had the joy. This thing, I mean, it's been great too. I mean, don't get me wrong, 30 to 150 for sure. But is there another 500% move in them? No, I don't think so. I think they're topped out. But I don't disagree with this as a short-term tactical play, and you're getting it at the right time as it just breaks out of the daily cluster and second-day momentum. I've been wrong so many times. But yeah, so that's a possibility, but I think that's more of a coffee table piece than a long-term disruptor. Too easily replicated. I mean, it's a personality coming to you on Zoom. Well, why am I paying $3,000 a year for that, and $3,000 for a cycling machine when I can get that through Zoom and athletic trainers for $20 a month? Just saying. Beyond Meat. Not quite 3D printing mistakes like the Israeli company. I told my wife about that. She says, no, not ever, not never. She's not a believer. But this is well poised. And again, the dissemination of innovation curve, there it is, the great big burst. the orderly sell back and 50% retracement, the long stable concentration and consolidation, and the beginning of the breakout with an SSC, perfectly placed and timed, right in the wheelhouse. That would be a routine harvest. And then finally, Apple, perfect critical state at the top. It hasn't even pulled back that much. I guess it has, but it's held at a higher level than the previous belly of the dragon. So if it holds here, you're getting it at a great price at 136, and it's going to go to 145. I just think that's just a no-brainer. You just got to buy that one. So good job, guys. Let's get this published and posted, and well done.